And this is exactly why I love technical charts. I've talked about this topic many times before, but I don't know if it's ever kind of been thrown at me this way. And I don't say thrown at me like an insult. This was just a question, and I want to answer that question because it's a good question. It's a valid question, but there's also some underlying dynamics here that really illustrate why learning charts are so powerful. So let me just get to this comment first, and then I'll answer the question, and then maybe you'll think, wait a minute, that answer sounds a little bit too good to be true, but then I'll explain exactly why it's not too good to be true. Clay, do you update your courses, or are all the courses just videos you recorded years ago? The main thing here I want to focus on is years ago. Basically implying, hey, are these courses, are they up to date? Because if you've recorded them years ago, then I could see them becoming out of date. And that's very valid. That's a rational thought. That's actually a very wise question to be asking. Because yeah, if something's been done years and years ago, especially in this day and age of technology, it's more than rational to think and question, so are they going to be out of date then? Or do you update them? And the answer is no, I don't update anything. I don't need to update anything. And that's the part where you may be thinking, what are you talking about, Clay? Technology changes like every 2 seconds in the world now. How do you not need to update anything? Well, let's just stop and think what technical analysis is actually based on, what it's actually telling us. It is telling us price and action. Those are the two core, indicators. But what are those price and, or the price and volume? What is the price and volume actually telling us? Well, they're telling us who is trading, what their thoughts are, what their behaviors are. In other words, they're basically just a measure of psychology. They're a measure of traders and people that are making up these markets. Because remember, people make up markets. Well, you have supercomputers and algorithms. People write those algorithms. People write all that code and script. So at the core, when you boil it all down, it is still people. People have emotions. And because people have emotions, they're going to act in predictable ways. Clay, no. Humans are unpredictable. Really? Do you really think humans are unpredictable? If I walked into an elevator and you're standing there and I go, la, 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 would you just stand there and be like, no, you'd be like, get me, what is going on? Why would you feel that way? Well, because blah, blah, blah. That's not normal, right? That would not be normal for me to go into an elevator and do that. Why is that not normal? Well, because we as humans are predictable in our emotions and how we behave, and most people don't behave like that. Another little kind of argument I would make is if humans and emotions and behaviors and all those sort of things, behavioral patterns, were unpredictable and totally random, psychology would not exist as a big point of research in the world. There would be no such thing as a psychologist. There would be no such thing as a degree of study in psychology. But because humans act in non-random ways and have certain behavior patterns, you can actually study that. So my point is this, that a chart measures human emotions. And because human emotions don't change, because people are predictable, that means that there's going to be certain patterns that show up in these charts. Maybe you've heard of technical patterns before. Now, I should offer up a disclaimer. There is more to trading. There's more to being a consistent trader rather than, hey, I know what a bull flag is, and I know what a bear flag is, and I know what a cup and handle is. There's more to it than that. Don't get me wrong. That's great. You're learning the patterns. There is still more to it than that. But my point is, those patterns don't change. A cup and handle candle existed 30 years ago. A cup and handle exists right now, and a cup and handle is going to exist 20 years from now. The classic bull flag pattern, it's existed 20 years ago, it exists right now, and it's going to exist in the future. Why? Because these are just based on human beings and how their behavior patterns are. And because we as human beings don't change from an emotional standpoint, yeah, we're all different with our emotions, but as far as a broad sense of behavior patterns, that all remains the same. And because of that, charts, technical analysis, that'll remain the same. It's not like a year from now there's going to be like some new technical pattern out there. No. Sure, maybe you could call a bull flag something different, but at the end, at the core, it's still the exact same thing from a behavior standpoint. So I will fully admit, and I've probably done this too within our community, patterns maybe get new names, maybe candlesticks get new names, but still, the psychology, the story that's being told remains the same no matter what. So So that is why I don't need to update my courses, because my courses are all updated based on technical analysis, which again is based on human emotions, and human emotions don't change. And that's why I'm a big fan of them, because that's pure power when you don't have to worry about something changing. Whereas a doctor, for example, they have to stay up to date on the research and the literature, because maybe something that is supposedly bad for us right now, maybe is good for you. Maybe something that people think is good for you right now turns out to be bad for you because they do more research and find stuff out. But in the markets, they're not going to research and be like, hey, that classic bull flag pattern, the classic cup and handle, the head and shoulders, it actually doesn't work. Well, no, it definitely works. That's why it's tried and true, and that's why it's been around since 20 years ago and it's still around right now. So, and nothing's going to change because of what it is all based on. So yes, that is why I don't change my courses. I don't need to change my courses. And really, at the end of the day, this would be my argument on why you should focus on and learn, the skill of technical trading. First off, thanks so much for watching the entire video. Real quick, before you go, I want to invite you to a live webinar, web class, training, workshop, online event, whatever you want to call it, but it will be me live revealing to you what I've discovered that has allowed me to transform myself from being an employee to being my own boss, including how I had only one losing day out of 73 days in total. I'm going to cover 3 keys that have helped me unlock profitable consistency within the markets. The first key is super weird, but in a productive type of way. The second key is super awesome because it quite literally is wired into our DNA as humans, making it very easy to use. But in a cruel way, this becomes a pitfall for many traders. I'll explain it all though, including how to avoid the pitfall that it creates for some. And yeah, the third key, when you hear it, sounds way too good to be true, but it's not, and I'll show you how it all works. Then at the end, I open it up for a question and answer session that is, again, totally live. Even if you can't make the live session, please still sign up as it will be recorded, and you can go back and watch the replay that I will send you. Click the image on the screen or click the link down in the description box so you can get the date and time and claim your spot, which I should note is limited due to the fact that this truly is a live event. If you have any questions, let me know. If not, I'll be seeing you soon.